Hi everyone, just wanted to do a quick video. I've been extremely busy. The markets have been absolutely insane and crazy. I've been doing tons of traveling. Actually going to be very near the Trump and Putin summit in Helsinki here over the next weekend. So that's going to be very exciting. Hopefully I can pick up on some interesting things for some trading ideas over the next couple of months as a result of that. But what I wanted to show you today is this. ALGT, 5 reasons to short this stock right now. And a lot of times I actually do a review of how, the stock that we send out in alerts has performed after it already performed. This one we just actually sent out to our alert subscribers earlier, both short-term and long-term alerts. So here's what we've got. Why on earth would you short ALGT? Happens to be Allegiant Travel Airlines. Okay, so here's what we've got. Okay, just a few. There's probably actually going to be more than 5 reasons, so bear with me. I'll show you exactly what we've got here. Okay, first we got diminishing RSI line as the stock actually tries to maintain. Clearly, we have this multiple top formation right here after we had sort of what was looking like a head and shoulder, a double top, whatever you see here. Both of them were, I think, were absolutely correct. But after that, the stock rebounded, right, and it tried to go higher. So 1 time, 2 times, 3, 4, 5, 6 times the stock tries to break out, regain control over this 160 level, and every time it gets to about 163, 164, it fails, it retraces back, and this time, after trying this many times, and had retraced all the way to the 140s, 150 range. Now, at the same time, because it's been trying this for quite some time, as you can see over the course of May and June, so that's 2 months. Now we're at a situation where we see a bearish cross that has just formed. So we got multiple top formation. We got diminishing RSI over the course of this entire chart, and we're going to take a closer look. If you've been watching some of my videos, I'm a huge opponent, if you are trading, to always consider multiple chart time frames. Okay, so we want to make sure if we take a solid trade, especially if we're planning to stay in the trade for longer than a day, if it's not just an intraday quick fast trade, if we're planning to stay in the trade for a couple of weeks to a couple of months, we want to make sure that we examine short-term charts, that we examine long-term charts. And so when we got not just one single thing pointing out to a decline or further decline, we have a combinations of 5+ things. That typically makes for a pretty solid trade. Okay, so here's what we've got. Again, if you take a closer look, we have, and by the way, if you've taken our chart course, we talk a lot about these candle formations. This is a very bearish candle formation. We call it a failed rocket launch to the moon. As you can see, the stock rallies all the way to 147.5 here, and it drops pretty much the same day. And so further, you see a further decline. So we send out the alert at about 140 and some change, I think 140.20. And so the stock so far has just dropped $1. No big deal, right? But here's some of the other bearish signals. At the end of the video, by the way, I will give you specific projections on what our projections are as far as short-term and long-term for the price of this particular stock. Okay, accumulation distribution. Look, and it's still not at the very bottom, and I'll reveal the significance of that in just a second as well. So as the stock moves higher here, right, every time it tries to break above this level right here, we actually see that there's more buyers more sellers rather than buyers are coming in, and therefore we're seeing a clear sign of a diminishing accumulation, or we see more people distributing or selling the stock right here, and the trend continues. Okay, so again, if we take a look at multiple time frames, so here you've got about 5 bearish reasons right here. If we take a closer look right here at the weekly chart, which will go back analyzing the stock price performance over the last couple of years, okay, here's what we see, and it's very important, right, is that we also have this def cross confirmation on a longer time frame. Actually took place here. And if you watch some of my other videos where I talk about the bearish crossovers, what's also known as the def cross, right, is there's different variations of them. And sometimes stocks fall immediately after the def cross takes place, and sometimes they actually rally higher and then they fall. But once they do fall, you typically will see a significant fall that averages anywhere from 15 to 25% from the point of the death cross formation, not necessarily from the top point after the stock keeps rallying higher. So, and I think we're at that situation exactly to where the stock could literally go easily, you know, 10-20% lower from here. And I'll reveal the target price specifically in just a second. So what do we see on a longer time frame? We have a confirmation of diminishing RSI. In other words, when the stock was going higher, we actually saw that the strength of the stock was declining. Boom, there it is. We also see a very bearish formation, which looks to me like a head and shoulders. We have some positive volume on the way when you have this shoulder forming. Then you have the head of the formation with a bearish candle formation sticking out right here. And then we have the other shoulder with a lot of negative volume. So to me, this is clearly a head and shoulder pattern accompanied by a death cross. Huge volume on the way down, which is another very bearish sign. We have a confirmation of the accumulation distribution that is also accompanied by a very bearish crossover right here on the MACD. So it looks like a very simple, very easy trade, especially if you're trying to take it long term. But yet, that's not everything. Hold on a second. All these bearish signs all over this poor ALGT. Man, I feel bad for you, ALGT. I would not want to be a stock like you right now, for sure. I wouldn't want to be any stock in the market right now because I think I'm overall pretty bearish. So I picked out a stock where clearly, you know, they weren't just influenced by my bearish view of the market right now, but where I had multiple reasons to show you why, right? So it actually is a very good thing when you're not observing just some bearish things in a particular stock itself, but when you take a closer look at the entire sector, right? So if the entire sector is dropping, it makes it for a pretty solid trade because, you know, look, you don't want to swim against the current. You want to swim with the current. And the current in all the airline stocks, and we could debate why all the airline stocks have fallen after such a great performance over the last few years. Partially could be attributed, of course, to the you know, skyrocketing oil prices. Okay, we don't know if that trend in oil prices is going to continue, but maybe this is one of the main reasons why institutional investors are coming in and they're literally just selling their positions in the stocks. Now, they have come down quite a bit, and by looking at this American Airlines, it's actually had one of the worst days as far as the percentage drops, which it had in a while, like in the last 6 months. I have it highlighted here by this big purple dot right here. And if you look at this, what I was trying to show you here is this huge bar that's sticking out. That's very similar to this bar right here, which was at this point until May was the highest sell volume in American Airlines. Well, today we actually topped this. We topped the volume and actually exceeds both of these bars, which were quite huge in the first place. So if you take a closer look, you also have the head and shoulders patterns right here in the American Airlines as well, followed by a death cross. So if you take a look further at multiple other airline stocks, you will notice that this is sort of almost a characteristic of every airline stock out there. So when I'm observing this, not just in one particular stock, and why would I actually pick ALGT over any other stock? Well, based on our trading strategies, we like to trade stocks that are higher in price, which you can do with an even smaller account. I know a lot of guys that trade stocks, they get confused with that. Well, I don't like the higher price stocks because I don't, you know, my account is not large enough, or whatever the reason or thinking may be. Typically, that's the main reason. So they try to shy away from the higher price stocks. A lot of times when you trade options, that is the main advantage. With a small amount of capital, you can control a huge position in a stock that typically wouldn't be accessible if you were just trying to short the stock. So instead of, for example, me putting on a trade on American Airlines, which is only, what, a $35 stock at this point, I would rather much short a LGT because, you know, just think of it, a 3% drop in ALGT would equate to, you know, $6-7. A 3% drop in American Airlines would be what, like a dollar or something like that. So huge difference from the perspective of trade and options. So I thought I'd briefly mention that. But look, some of you may argue, okay, well, why would you short them now? They have come down quite a bit. You know, look at the, you know, it looks like the RSI is overbought on American Airlines. Would you want to just come in and buy it at this point? Looks like it's oversold. Well, here's an interesting thing. Okay, look at this. Just as when it seemed like accumulation distribution, American Airlines just couldn't go any lower, look what it does today. It drops like a rock even further, okay, and on huge volume. So typically I wouldn't expect, you know, my probability of the fact that this stock is going to keep moving lower at this point is much more significant than the probability of it bouncing from here. And if it is going to bounce on lower volume, that's going to actually present a great opportunity to add to the position and short the stock. Now, going back to the ultimate question that everyone is probably wondering right now, okay, so how low can LGT go? How low can it go? Okay, short term. Short term in this particular example is going to be 2 to 3 weeks. So right now the stock is roughly at 140. We're saying nice little easy drop here to 131, 133. Earlier, I'm not sure what they're going to be priced tomorrow. I know earlier when we sent out the alert, we were able to buy 135 puts for $1. Okay, so we're targeting roughly 300% gain here. So if the stock drops to these levels right here, 131, 133, then those put options that we were buying today for $1 should be valued easily, you know, in the range of $3, maybe as high as $4 if it does hit a level of 131. Okay, long-term wise speaking about ALGT, we see potential for it to drop all the way down to 115 to 120. And in our view, whether I was just showing you, right, the RSI is completely oversold in American Airlines, right? You can clearly see that it's under 30. But this is the first huge day lower right here. If we were to compare that to the charts of, look, the accumulation distribution on ALGT still have quite a bit more room. So in other words, that tells us not everybody that could have sold the stock has sold it already. So I see some more downside. You know, we have the RSI is actually still at 40, so it's still got some room to get to the point where it would actually technically get to an oversold territory, which would be under 30, right? So I am still seeing some more room in this stock to move significantly lower compared to some of the other airline stocks. And clearly the way we were coming with our 115, 120 target, this is sort of the previous low that was set roughly a year ago, but we don't believe it's going to take very long for the stock to potentially get there. You know, again, the short-term target is this quick move just above the 130 from where it's at right now, and longer-term move all the way to this 115, 120 range over the course of the next, you know, 60 to 90 days. So there it is. 5 reasons, actually more than 5 reasons to short this poor little LGT. Stay with us. If you're not subscribed, subscribe to the channel. If you're not subscribed to the alerts and you're a busy professional or you're running a few businesses, simply don't have time to pay attention to every single little thing that happens in the market daily, just click the link below, subscribe to the alerts, and get them delivered directly to your cell phone. Okay, and for those of you that actually would like to learn the in-depth analysis of how the charts works, how the day trading works, how to maybe turn this into your future profession. Maybe you're currently trading part-time. Okay, if you'd like to do that, there's very useful links below this video. So simply click, get the information. Every video below will give you an explanation of how a particular product will benefit you. So take advantage of it. Thanks for watching the video. I'll catch you on the next one. Take care. Whoa, stop. What is going on here? Well, what you're looking at is a plummeted price of AutoZone stock in just a matter of an hour or two when it went up pre-market from 710 and fell later in the day all the way to 596. Why should you care? By utilizing a very simple option strategy, we were able to turn every $1,000 of investment from 9:30 in the morning till 10:45 a.m. into an excess of $10,000. That's right, literally a $10,000 investment produced in excess of $100,000 in gains. the crazy truth about stocks and options trading. Most of the fortunes were created when stocks fall. So if you're not utilizing this crazy strategy, you're definitely missing out on thousands of dollars and you're leaving that money on the table for somebody else. Look, these are the facts. Just think about it. Stocks drop actually much, much faster than it takes them to climb higher. So just take a look. There's your AZO graph right here. It took it a month, 2 months to get from this 580 level all the way to about 700. And look how fast it dropped just in one day. Now, how do we know that this had a potential to happen? Look, it has a history of doing these things at the same level at around 700. It did it last time during the earnings report. So you don't have to be a rocket science. You just got to know which stocks, when to take action, and you got to know how to find the stocks. Has it ever occurred to you that every day when the market goes higher, there's plenty of stocks that actually drop? Because if every day some stocks did not drop, then the market would go to the moon, just like Bitcoin, right? The reality of life, everything that goes up must come down. Look at the housing bubble in 2008. Bitcoin prices, when nobody believed, we put a recommendation at 18,800 to short Bitcoin. In other words, to make money when it falls. The bottom line is this: you don't need a market crash for you to actually profit on stocks falling. The opportunities are there every single day. You just got to know where to look for. If you grasp the simple idea that stocks fall much faster than they go up, you will be able to become a much more effective and efficient stock or options trader. Okay, hold on. So what you're saying is while everybody's chasing the stocks on the way higher, the real money is actually made when stocks drop. Yes, that's exactly what I'm saying. If you'd like to learn more about this fascinating and yet such a simple strategy, I invite you to go behind the scenes with me where I will reveal to you how I turned 12,000 into 466,000 in less than 7 hours trading options with this strategy. And I know this sounds crazy, but I actually did it. And I want to share with you all the specifics, all the details of how I was able to accomplish that. So if you'd like to become a better trader, take action now. Click the link on the button below. Life is too short. Don't waste another minute. Today is your day.